Welcome to now.tv's weekly venture report with the distinguished venture capitalist, Keith Teare, an Anglo-American legend in his own mind, at least, if not in everybody else's. Keith, we couldn't have a week in venture without someone announcing both the end of venture capital and the end of capitalism. What successful VC is doing it this week?
Well, Albert Wenger from Union Square Ventures did a very long but interesting interview with DLD, the German conference put on by the Berde company, titled "The End of Capitalism?" Focused on the coronavirus and the rise of worklessness. And in the very same week, the Wall Street Journal and Elad Gil, who's another well-known venture capitalist, wrote about the flood of money into the Indian company Jio, which is owned by the Reliance Group there. Facebook put $5.6 billion into Jio, and pretty soon afterwards, General Atlantic poured money into it, as did Silver Lake Partners. So on the one hand, you've got the end of capitalism ? The other side, it's the power of capitalism ? And Jio is a phenomenon to behold. It's got over 300 million subscribers on an India-wide mobile internet service provider with content and all kinds of stuff. It's one of the fastest growing, largest things on the planet right now. So
Albert Wenger, though, does have a very well thought out and serious vision of a kind of post-capitalist age in which it's almost Marxist from Marx's German ideology, in which we're all busy pursuing our passions, and there's so much surplus value in the world that no one actually needs a job. Is that fair?
I think it is fair. I've read the German ideology, and
I thought you wrote it.
Not quite, but you'll remember the sentence, Andrew.
Yes, very well.
You can be a fisherman in the morning, a philosopher after dinner, and so on and so forth, which is all about what is called the realm of freedom. And the realm of freedom is no need to work because the needs of life are taken care of through automation. And that's what Albert talks about. He talks about the rise of leisure time, the growth of worklessness driven by the inevitability of automation, and asks really good questions about how does the human race sustain itself once we reach that relatively inevitable stage.
And I know Albert's very close to Andrew Yang. I think he was one of the first 3 or 4 people to support Yang when he ran for president. So he's a very serious figure. Keith, I noted in the New York Times that there was a pretty interesting piece this week on Clubhouse, which is all the rage in Silicon Valley. Tell us about Clubhouse and what's getting all the VCs so excited about it.
Well, in the newsletter I published this week, Clubhouse's founder, Paul Davison, is interviewed by Malik, but with a twist. It's an old interview when he was doing his previous company, having been an entrepreneur in residence at Greylock Ventures. And the thing that's striking is a young man, is he's supremely confident and intelligent about social interaction. It's a 3-part interview, all 3 parts are in the newsletter. And Clubhouse is his latest, and it's just received a very large investment after an auction between Andreessen Horowitz on the one side and unnamed VCs on the other, very early in its life.
Not exactly flying cars. The piece in the New York Times pointed out that Mark Andreessen wrote a really interesting piece a couple of weeks ago saying we all need to build, and now you have Andreessen Horowitz investing in just another.
So I don't think it's necessarily Mark's last word in innovation. I think he probably will make money from it, and in that regard, that's his job. So it's probably fine.
The Times piece was pretty was pretty critical, at least implicitly. It presented Clubhouse as a place where all these wealthy venture capitalists and technologists would network online, and suddenly all the VCs wanted to pour millions of dollars into this startup. Is there anything more to it than that?
I don't think there's anything more to it than a piece of software that fits the need of the times. It's what I sometimes call the unborn child. Nothing needed to be invented for Clubhouse to exist. It just needed to be put together. And in that sense, it's painting by numbers rather than invention. But that's not to diminish it, because timing is everything in company building. If you do something at the right time, the very same thing done at the wrong time wouldn't work. So I don't think you can knock it. I think the New York Times, being an organization that still uses ink, typesetting, and printing presses, hasn't got a lot to talk about invention.
Well, I don't think that's fair, Keith. I mean, they're the pioneering now digital journalism very successfully. So I don't think you can write them off as just an old-fashioned newspaper.
No, but compared to Mark Andreessen, they're certainly. It's a difficult argument for them to win.
We wouldn't have a week in venture capital, Keith, if it wasn't for more stuff about Bitcoin and blockchain and crypto. This week, a Coldplay member came out in favor of Bitcoin democratizing finance. How are the pop stars of today supporting the Bitcoin of tomorrow?
Well, I think he's an exception, is the first thing to say. But he does make a very, very good point. The nice thing about Coldplay is it's music made for the masses. And the one thing you can say about Bitcoin is it is not money made for the masses. It's money made for incredibly technical people who understand very long encryption addresses for wallets that are hard to get money into and out of. So the point he's making is Bitcoin makes a lot of sense, but you have to make it easy for people to use, and it currently isn't. So that, interesting enough, Andreessen Horowitz also have a voice here this week, because they published the first 5 or 6 episodes of videos that come out of a crypto workshop that they held over 7 weeks recently, where they're teaching developers how to use blockchain and crypto to build the next generation of software. And they made a very optimistic point, which is that Bitcoin is in its 4th wave, and in every previous wave, the value of Bitcoin went up significantly. Bitcoin's, as we speak, at $9,112 per Bitcoin, whereas every other asset class has been going down in recent weeks. Bitcoin's been going up. So Andreessen are doubling down on Bitcoin, as is the Coldplay guy, and I think they're going to be proven right in the medium term.
What will that mean? I mean, talk to me a little bit about the app that the Coldplay musician is supporting. Is he an investor?
It wasn't clear, but I suspect the answer is yes. And the app is, the center of Bitcoin is a wallet. So just like Apple's wallet on the iPhone or Google's wallet on Android, Bitcoin sits in a wallet, and you need to be able to spend it. And right now, in order to spend it, you have to change it into dollars or pounds, depending on where you live. And then you spend the dollars or pounds the normal way on your credit card or through your bank. What he wants is to make it possible to spend it and exchange it much more seamlessly, single step, just like you would with money. And that's
isn't that
correct.
Isn't that kind of the next step of Coinbase as a sort of platform for the exchange of cryptocurrency?
Yeah, Coinbase already has a Visa card. So if you have crypto in a Coinbase account, you can ask them to send you a Visa card. you spend from the Visa card as if it was cash, and they deal with taking your cryptocurrency, turning it into cash and settling. So it is exactly as if it's cash. So Coinbase are already there and can already do that. They're not alone. There's others that can do that as well. The big question mark, Andrew, is why would you spend your Bitcoin? This is a point Tim Draper, who's a big Bitcoin holder, always makes. If you have a choice between spending $1 and a Bitcoin, spend the one that's going to decline in value, not the one that's going to rise in value. So why would you spend your Bitcoin, and why do you need a credit card for your Bitcoin?
Well, then, but then you're just presenting Bitcoin as a kind of a speculative commodity, not as a form of exchange.
Well, it's closer to a house. You wouldn't spend your house. Why? Because it goes up in value over time, and spending it means you don't gain from the uptick in the value. Same as stocks. If you own stocks in Apple, would you spend $1 or would you spend a stock of Apple? So Bitcoin is a store of value in the same way a house or a stock.
But then you take it, and then what do you do then when you sell your house? You turn it into currency. What do you do when you sell your Bitcoin? You turn it into traditional currency or a new kind of cryptocurrency?
That's up to you. People do both of those things. There are hundreds of cryptocurrencies these days, all serving different purposes, some rising in value, some declining in value. And so it's just like the stock market with lots of stocks and shares. A cryptocurrency is a tokenization of an underlying asset. So you could think of the token as being very similar to a share. Then the question is, well, what is the asset behind it? And is it valuable? And in the case of Bitcoin, its role is as a universal equivalent for all other things, just like gold. It's a store of value, and it is in short supply and high demand. So that is driving the price up. So it's a digital version of gold. And the question then is, can something digital that isn't, touchable and feelable be valuable as a store of value? And I think the proven answer is yes, it can.
Keith, talking of Coinbase was one of the companies this week, along with Facebook and a number of other big players in Silicon Valley, who have announced Shopify, although they're Canadian, not Silicon Valley based, who have announced basically the end of the physical office. Is this significant in your mind, or is all this PR, these companies just trying to make a bit of noise during the pandemic?
Well, it's certainly significant in the pace of announcements is accelerating, and the companies that are going down this path are large and important. So it's definitely significant. I think the big question, which we don't know the answer to yet, is whether software can compensate for lack of face-to-face to the point where anyone except the digital natives can do this. I think digital natives can do this. They're used to the software, they're used to working with video calls. What we've seen in the pandemic is non-natives starting to do it as well. I've had a lot of calls this week with people that wouldn't have been seen dead on a video call before the pandemic. So the staying power of this shift, I think, is a question mark, but it's definitely going to be real for the digital natives.
Why has Jack at Twitter and Zuckerberg and the Shopify people, why have they all come out with these announcements? What's in it for them?
Well, many advantages, right? Cost of office space is the second largest cost for any company. The first is people. So if you can get rid of your physical assets, your offices, your desks, and so on, that's a massive saving. It's probably something in the order of 10 to 15% of a budget for a company gets saved. Obviously, software is driving savings on people. So if you can have people, because software does more of the work, that's probably somewhere between 85% down to about 60% of the rest of your budget. And so buildings and people, those are the core losers when it comes to automation and distribution. And I
So
think
it's
that
bad
is a
news. Yeah, there's a lot of talk in the Bay Area where we both live that this is really going to decimate San Francisco because Jack Dorsey at Twitter was someone willing to take a bet on downtown San Francisco, and I think most people would now agree that he failed, or maybe he didn't fail, but San Francisco's failed. San Francisco, if anything, is worse now than it was a couple of years ago, downtown San Francisco anyway, in terms of its homelessness and its filth. Does this mark really the end of that experiment in companies like Twitter trying to revitalize San Francisco?
I think it feels as if the answer to that might be yes. I think it's a little early to be definitive, but it's certainly starting to feel as if the answer might be yes. The previous mayor put a lot of effort, along with a good friend of mine, Ron Conway, who's an angel investor for Silicon Valley Angel. Ron and the previous mayor put a lot of effort into bringing Salesforce with Mark Benioff, and the Salesforce Tower, of course, is now complete and populated. And that trend to come in certainly has slowed down, and it may have reversed. Cities in general have seen a massive trend towards them. One of my portfolio companies, InFarm, does vertical farming with the purpose of feeding people who live in cities through farms that live in buildings. And that's driven by urbanization, which is a massive trend, especially in Asia. And let's not forget that Asia is going to have 66% of the middle class in the world within the next 10 years. So I'm not convinced that urbanization will reverse. In fact, I think it's very unlikely. But I think San Francisco as the hub for startups could slow down and reverse quite likely.
Finally, Keith, we started with the death of capitalism, at least Albert Wenger's vision of it. Are we really, though, living through during the pandemic of 2020? Are we really living through the death of analog capitalism and the victory of virtual capitalism when Mark Andreessen famously wrote in 2011 that software was eating the world? In 2020, can we argue software has indeed eaten the world?
I don't think we can say it's eaten the world. Only 3% of consumer commerce goes through e-commerce today. 97% still analog. So I don't think it's completed. I think it's going to be impossible to stop because it makes sense for the human race to become more efficient at getting the stuff people want to them, all the way from manufacturing, all the way through to consuming. But we're locked into that end game. So Andreessen is going to be right. Unlike Bill Gates, who said a PC on every desktop, and sadly for him, he succeeded in doing that very early in the life of Microsoft and didn't know what to do next. For Andreessen, software eating the world is going to be an enduring theme that isn't complete, therefore remains relevant.